Hey everyone, and welcome to Latest Finance. Here at Latest Finance, our goal is simple: to keep you informed, empowered, and ahead of the curve in the fascinating, sometimes complex, world of money and markets. For our very first video, we're diving into a topic that's probably been on your mind. You've definitely heard about it, and it affects every single one of us. Inflation. What is it? Why does it seem to be everywhere right now? And most importantly, what can you do to protect your hard-earned money from its effects? Let's break it down. At its core, inflation is the rate at which the general level of prices for goods and services is rising, and consequently, the purchasing power of currency is falling. Sounds a bit jargony, right? Let's simplify. Think of it this way. Imagine a basket of groceries, the same exact items, year after year. If that basket cost $100 last year, and this year it costs $105, then you've experienced 5% inflation. It means that the $100 you have today buys you less than it did yesterday. Your money literally loses some of its buying power. It's often measured by things like the Consumer Price Index, or CPI, which tracks the prices of a fixed basket of goods and services typically purchased by households. So, why does inflation happen? There are a few key drivers. Demand pull. Inflation. This happens when there's too much money chasing too few goods. Everyone wants to buy, but there isn't enough stuff to go around. Think of when a new video game console comes out and everyone wants it. The price often goes up. Cost push inflation. This occurs when the cost of producing goods and services increases. If the price of raw materials, labor, or energy goes up, businesses have to charge more for their products to maintain their profits. We saw a lot of this recently with supply chain issues and rising energy costs. Increased money supply. When a central bank, like the Federal Reserve in the US, prints more money or makes it easier to borrow, there's more money sloshing around the economy. If the amount of goods and services doesn't increase proportionally, prices tend to rise. Okay, so why should you care? Inflation isn't just an abstract economic concept. It directly impacts your wallet. Erosion of savings. If you have money sitting in a basic savings account earning 0.5% interest, but inflation is at 5%, your money is actually losing purchasing power by 4.5% every year. That $10,000 in your account will buy you significantly less in a few years. Higher cost of living. Everything from your groceries and gas to rent and utilities becomes more expensive. This means your paycheck doesn't stretch as far. Investment returns. Inflation can eat into your investment returns if your investments aren't growing faster than the inflation rate. So, what can we do about it? Here are a few strategies to help protect your money from the bite of inflation. Invest in assets that beat inflation. Stocks. Historically, the stock market has been one of the best hedges against inflation over the long term. Companies can often raise prices to offset their own rising costs, and their earnings can grow faster than inflation. Consider diversified index funds, or ETFs. Real estate, property values, and rental income often tend to rise with inflation, making real estate a popular inflation hedge. Commodities. Gold, silver, oil, and other raw materials often perform well during inflationary periods, as they are the very things whose prices are rising. Treasury inflation-protected securities, TIPS. These are U.S. government bonds specifically designed to protect against inflation. Their principal value adjusts with the CPI. Avoid excessive cash holdings. While having an emergency fund is crucial, keeping too much money in low-interest savings accounts is like watching your money shrink during high inflation. Deploy it wisely. Focus on your budget and skills. Control your spending. Now more than ever, understanding where your money goes is vital. Invest in yourself. Improving your skills and increasing your earning potential can help you keep pace with rising costs. So to recap, Inflation is the rise in prices and fall in your money's purchasing power. It's caused by things like high demand, rising costs, and increased money supply. But you're not helpless. By strategically investing in assets like stocks, real estate, and commodities, and by being smart with your cash, you can protect your wealth. This is just the beginning of our journey here at Latest Finance. I hope this video gave you a clearer understanding of inflation. If you found this helpful, please hit that like button, subscribe to Latest Finance for more insights, and ring the notification bell so you don't miss our next video. What finance topics are you most interested in? Let me know in the comments below. Thanks for watching, and I'll see you in the next one.